Fibonacci, a Fibonacci. Okay, we do a Fibonacci breakdown. Fibonacci retracement tool, a tool used to measure whether the market is presenting you with a retracement entry opportunity or perhaps a reversal. And then the second half to the Fib tool is it helps you find take profit levels. If you're creating higher highs and higher lows, you're in an uptrend. This move right here and this move right here, these are called retracements. The market's never just going to go straight in one direction, right? It's always up and down or down and up. If it's the other way, you have this motion. This here is a retracement in a downtrend, retracement in an uptrend. The whole point of the Fib tool is to know when it's time to enter the market and when it's time to get out. Price comes up, drop back down. We don't know if this is going to be retracement or a reversal. So the Fib tool is going to help us nail a good entry. Here we have the exact Fib that I use every day in my trading. This is how I set it up. Of course, you can put whatever colors you want, but what's important are the measurements here. 0, 1, -1, 62, 705, 79, -27, -62, -1.5, and 50%. Now, I'm going to break down what each of those mean. Measuring on higher time frame, because when I'm measuring higher time frame, I prefer to measure the bodies of the candles because they have the most volume. You get true read. On lower time frame, it's subjective. It depends on the framework and the setup, and typically I will measure both with wicks and then the bodies too, just to see what gives me a clear picture of confluence. Looking at this Fib, right now we're measuring this downward push. The reason why I'm measuring this downward push right here is it is the bearish rally or sell-off that broke these lows and also broke out of this range. Upon doing so, you will notice my Fib measurement starts here. I have this diagonal dotted line. My Fib measurement ends here. In the middle, 50%, this is fair value or equilibrium. In a bearish scenario, anything above fair value, anything up in here is considered a premium price. I only sell at a premium price. Why? Because that's what banks and the big players do. Business 101. If you're going to sell something, get a premium price for it so you make the most amount of money. Now, flipping that, if I was in a bullish scenario looking to get long, I would only buy under the 50% because that would be considered a discount price. The big banks, the big players in the game, will not buy unless they're at a discount price, and they will not sell unless they're in a premium price. That is determined by range, which I'm not going to get into in this video because I'm going to keep it to the Fib. Aside from 50% fair value equilibrium, I do what ICT's taught, round it off. So 62%, 705, and 79%. This range right here, from the 62 to the 79, this is considered OTE zone or optimal trade entry zone. The 705 is the precise optimal trade entry. 705 measurement mostly comes into play when you're utilizing time and price together within kill zones. Something for another video for another time. I'm going to keep it to the Fib. So measuring this downward push that broke out of this area, you'll notice we get a retracement that comes up and tags the 62, and now it's starting to fall away. So now we're going to turn our attention to take profit levels. The first place that I'm going to take profit, before then, a lot of times I'll take my trades, I'll enter right before the 62 just because it doesn't always make clean contact. You could wait, depending on the time frame, it could be a little or a lot of drawdown, so it really depends on your framework and what's going on, circumstances. So my first profit is going to be just above the bottom of my measurement here, and that's called my scale take profit. The reason why I take a little bit off here is in the event price wants to double bottom and reverse and run back up, I've secured some of the bag and I'm paying the trader. Next, we're going to go to -27, which is my take profit 1, -62, which is take profit 2, and then we have a full symmetrical price swing, which would be take profit 3, and then we have a standard deviation -1.5. which for another time, another video. But you will see the 1.5 standard deviation down here come into play a lot. Price really likes to go to this mark depending on the framework of what's happening up here when you get in. Again, these are the measurements of the fib. That should give you a clear breakdown of what each of them mean. I don't run a 382. I'm not concerned with that. Why? Because I'm not trying to sell at a discount price. I'm trying to sell at a premium price, and vice versa if we were bullish. Next, I'm going to give you all an example of how I would use the fib tool to actually get an entry. And again, we're just going to use Euro USD right now because I have it up already. And we will rewind it. I know we're kind of cheating because we already know where it goes, but come on now, just for an example. What I'm looking at here is we have this range of price. And the range that I'm looking at here, so we have this range right here. Notice I'm only paying attention to the bodies, not so much the wicks for the range. Volume of orders, right? So what we have happen, this range right here, we get a sell-off that breaks out of the range in downward motion. So this is where we're gonna take the fib tool and we're gonna measure, because we're on a daily time frame, we're on a higher time frame, I'm going to utilize the candle bodies. Where the push started to where it ended. Now, one could argue that you would measure it from here to here. Okay, let's do that. Boom. Maybe I would have gotten in here, but because we are on a daily time frame, because now remember what I said about entering just before the 62. Keep in mind that because we're on a daily time frame, this is a lot of distance, so I would not do that. On a daily time frame, honestly, I'm going to be looking more for optimal trade entry. And because we are measuring from this short turn right here on this breakout expansion, or sell-off rather, because we're measuring from here to here, ideally we'd want to wait for optimal trade entry. So let's just say we set a pending order here. You can run your stop above the 100% mark measurement, or maybe above the 88%, or maybe just behind the 79. It really depends on your framework of trading and how you look at the chart, how you analyze, because everyone's going to be different. Let's do it the super safe Sally way, and we'll put it right there. We'll run this out. Why not, right? Remember, we're going to scale some profit out somewhere around scale 1. Because we have this daily order block right here, this would be my scale before the order block. You're most likely going to get a mean threshold hit, 50%, but I don't like to push it. That would be plenty right there. After this, breaking these lows, we would be taking our first profit level at -27. I've also been experimenting a little bit with moving this down to the retracement level, wherever that is, and then looking for take profit hits off of that reduced measurement. You can play around with that. We're just going to leave it like this for the sake of this example. So we got triggered in here. Oh, now we're just going to have to wait and see what Euro USD does. We've been triggered into the trade. We had to withstand 20 pips of drawdown. So for nonchalantly doing it, not bad, right? I mean, 20 pips is way too much for me personally, but for the sake of the example, let's say we had measured it up here and we entered off of the 62 and we ran our stop right there. You would have had no drawdown on that. So measuring the expansion or the sell-off that breaks out of a range, retraces up, looking for our entry in the optimal trade entry zone, preferably the optimal trade entry mark. First scale take profit before the end of your measurement, TP1, TP2, full symmetrical price swing, TP3, and standard deviation 1.5, negative 1.5. We'll just have to see how it goes. Now there's different ways of measuring certain things to make this standard deviation down here a more powerful and probable price target, but I'm not going to teach on that because it is ICT's teachings. You can learn it from him if he's willing to teach you. And I hope this video helps you learn. I hope it helps you get better trades. And remember, everything in the market is fractal. Just because I did this example on the daily time frame doesn't mean that the same framework won't work on a 15-minute or 5-minute or 2-minute. Everything the market does in higher time frames, it does in lower time frames, and vice versa. Peace out.